and they will inspire and quote unquote engage and engineer sentiment. So when we're looking at order flow, we're referencing what the retail trader may be expecting in price action based on what books and theory they use, what they're looking for price patterns, like bull flags and head and shoulders and stuff like that. We don't like those patterns. I am teaching you not to draw any affinity for those things except for taking advantage of being against that principal idea. When there's a wrestling match between smart money and retail price patterns like that and harmonic patterns and things like that, they will lose. They will lose every single time if it's against a smart money idea. Now, when that wrestling match begins, you may or may not know at that moment that you should be expecting or anticipating it because you're relatively new. That's the benefit of seeing it over my shoulder. When I'm showing my charts and I'm talking over top of it, I'm giving you that 3 years, I'm sorry, 3 decades and 30 years of experience reading price action. You're seeing it through my eyes, and I'm doing my best, and I may not be effective, as much as I'm hoping to be, as far as articulating what should be happening next and what's going on. But over the year, listening to your feedback and such, I'll use it constructively if it's respectfully given to me. But there's also limitations as far as where I'm going to go and what I'm going to do. So, but real time watching price, and as price is moving up, let's go back to that analogy of we're looking for higher prices. Let's assume for that moment, price is likely to go higher. It's going up to a premium level. It's going to a buy side liquidity pool. It's obvious the market wants to get up there. It just keeps pressing higher, higher, higher. And what we're looking at for order flow is, do every PD array that I would teach you and what you see me reference in real time 1 minute charts, is it providing support? Is it preventing price from going below 3 PD arrays? A buy program where markets are bullish and we're looking for price to continuously deliver. Delivering is constantly booking and printing new higher highs, not higher highs like in thinking like market structure, like you see people teaching market structure, higher highs, higher lows, higher high. Fuck that. That's too simplistic. That is not what I'm teaching you. You don't ever hear me teaching higher high, higher low bullshit. Okay, that's right out of retail books. Stop that. It's understandable and it's introductory. That's great. What I'm talking about is, does each individual candle, when it expands higher, when you're bullish and you're watching that buy program unfold, and it's digging in to higher prices and just keeps printing and creeping up and encroaching on that old high where buy side liquidity pool is resting, where real buy stops are resting. I'm teaching you to look at every individual candle and how it relates to the candles just before it. So it's going to create a small stair step, and every little candle should support the new one. Every down close candle, I'm looking at that. This is the primary function of how I teach order flow. A bullish market, when the market rallies away and it's reaching to buy side liquidity, I'm watching, does the down close candles support price? That's a primary observation for me. I'm looking at that. By itself, that's going to serve you better than any of the bullshit out there you're looking at. You're looking at level 2 data. You're looking at, ladders and depth of market and volume profile. All that stuff is distracting you from just looking at the candles themselves, because they're going to tell you everything you need to see, and it won't divert or dilute your attention. You're simply looking at, how are the candles relating to one another? Is it continuously giving you constructive feedback that you are on side and expecting higher prices? Now, that's not to say that you won't see a break lower that comes back for a short-term low and takes out a pool of short-term sell stops. That's normal. That's absolutely normal, which is why I teach how you are not to be in a rush to move your stop loss. That's the number one reason why I tell you not to be in a hurry to move that stop loss up. I'm training you to trust and have conviction about where the market's going to go. Your safety net is your stop, but you don't need to have the safety net and training wheels and harnesses all around you because you're going to be too afraid to trade then. You have to step out there and embrace that uncertainty by watching the candles print, and that's essentially booking price. When that higher price is expected, that's gravitating towards that buy stops. Every down close candle should support any return back on the new candle or a future candle that would trade down into it. It's going to expand higher and then pull back a little bit, expand higher and pull back a little bit. And the narrative behind what price is doing, you can read that and internalize how all the real order flow is coming in. I don't need a fucking chart to tell me how many orders were at every price level inside that candle. That's too much. That's too much information for me. I don't give a shit. I'm reading what the market's going to, I'm already going to know what the fuck they're going to be doing. I'm telling you that they're going to be buying here. Just listen to my commentary when the candles are forming. All right. It's going to go down here. It's going to stop here. I don't need to know what the numbers are, just like those reports. Who gives a shit what they say about the data? I don't give a fuck how many people lost their job. I don't know how many people's going to get a job. The employment data, it's all bullshit. It's old anyway. You can't do anything with that. So why waste your time on all that? It's extra shit. Focus on what matters most. That means the price right now. And as long as price is moving in the direction that you expect it to go to, down closed candles are supporting price. Now they can go through them. When would we expect price to go through them and not freak out? If there's a fair value gap, if there's a short-term low that has recently formed, and we are not in the upper quarter of where the price should go to for target. Let me say that again slowly so that we understand what I'm referring to. If you believe that you have figured out where the low is in the market for this particular price swing, and you think it's going to go up to an old high where buy stops and buy side liquidity is, that midpoint of that run, that will be equilibrium. Now that range is not really there yet. You're just implying that that's where it's going to likely go. So therefore, between where you think the beginning point of that run is, the low, you may or may not actually be in the move yet. But assuming that you are or aren't, who cares? The midpoint of that equilibrium price point, at that point or below it, that's where your best buys are going to occur. But now, as soon as we get to the upper quarter of where that target is, you're going to see less likely retracements to a stop that would be below old lows. Like in other words, the market's not likely to go back for sell stops. Now it can, but largely it doesn't. And this is getting back to when I was teaching you this week how to, when you're pyramiding and you're adding more to a winning trade and you're building your positions up, as soon as you cross the threshold of the opposing side of that discount to premium or premium to discount range, and we're going to use the analogy I'm talking here, we are in a buy program. That means they're expecting higher prices. It's going to go to a premium inefficiency fair value gap or an old high to run out stops. So that's the magnet, that's the draw on liquidity. So as the market goes higher, whether you got in at the low that started that price run or didn't, you got to know exactly where to go back to see the beginning of that move. So that point of inception and where your target is, which is terminus, between those two price points is equilibrium. That's where the difference between discount to premium, that's where it starts and ends. But if you go halfway between equilibrium to your target, which is terminus, that's in premium range, not discount. In other words, think of it like now we're overbought. I'll talk to the folks in here that are used to listening to and understanding retail logic. As soon as we get to the final quarter of the run, it gets to the target. As soon as we get into that vicinity in terms of the price run or range of how far it's been moving up, it's less likely to see a stop run below old lows. Why would it be like that? Because it's going to be in a hurry to run out the buy stops because they may catch wind about what's likely to occur. You know what it's like to be short and your stop sitting above an old high. You're praying you become a Christian then, don't you? You're looking for Allah, you're looking for Jesus, you're looking for whoever. Somebody answer me. You become religious then. Even the atheist starts praying. Because you know, as it's getting closer to your stop, it's likely to do what? Run for it. And that's why the market is less likely, not that it's impossible to do so, but it's less likely for it to come back against you and run sell stops before it runs to your target, because it's going to be in a hurry to reprice, because it doesn't want to give the opportunity for those orders to be pulled, close the trade and collapse and reduce the amount of liquidity for smart money traders. That's why the algorithm's coded that way. It's coded to do that very thing, because right above those highs, it is not aware of the human aspects of, oh no, I'm scared, let me just close my trade and protect the stop. For those that are smart, it just knows that once we get to that last quarter of the price run, accelerate. Boom, 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 boom. That's why you see me talking about, and you see me here now this week, and you watch me do recordings of executions. I'm looking for speed. I'm looking for the big range candles expand up and run into that liquidity. Pow! That is a purge of liquidity. Stop calling it a liquidity grab. That pisses me off. It's not what it is. It's a purge of liquidity. So order flow, we're looking at how those candles support one another, and how, if there's any retracement, it's only going to retrace down to the nearest fair value gap below price. Well, we're in a buy program and it's moving higher, reaching for buy side liquidity. Or every down close candle will support price. Everything I just said, reverse it when you're looking for lower prices. Every up close candle should resist price from going any higher. Now, it does not mean that up close candles, while the market's bearish, can't be breached and traded above. Because if there's a fair value gap above it, it's reasonable to expect that. It doesn't undermine the efficacy of what I'm teaching you. It just means that the market's going to go back and offer fair value to the marketplace, which is going to be identified by you as a smart money trader as a new opportunity to add or enter. If you haven't been a participant in the trade yet, that could be your invitation and means of accumulating a short position at that moment, and not be in the best case entry point. And that best case entry point is relative. Even though everybody would like to say, okay, I want to get in at the very low and buy that low, your skill set may not permit that yet. So don't rush that. And I'm seeing folks, bitch and complain about how they are frustrated because they can't get their trade on. You're not supposed to be trading right now. You're not supposed to be trading right now. And you're not listening. You're not listening to my videos. You're not listening to me in the live streams. You're not listening to this when I'm talking to you here. This is in these Twitter spaces, I'm taking you to the woodshed. You're not going to like how I talk to you, but I'm talking to you like a trainer. I'm talking to you like your father. I'm talking to you like your best friend that wants you to do well. And I'm trying to have an intervention here, because you're fucking up when you push the button to enter trades while I'm doing what I'm doing. You're not learning anything. And the proof is you're complaining because you're complaining about and worrying about that your trade didn't get put on, instead of understanding what I'm teaching you, watching and observing that, and seeing what it is that you're supposed to glean from these lessons, not just simply, well, he said basically to pick these lottery numbers and I'm going to do that. And that's, you're doing it wrong. You're being a fool, you're being foolish, and you're being ignorant. You're extending the ignorance that you hold right now by trying to trade on what I'm telling you to look at and observe. And I mean that with every measure of love and respect. I don't want to see you waste this opportunity. And this is the first week. And already there's dozens of you that are fucking up. You're trading. You're using it to use for a signal service. And that's not what I'm intending it to be. You're not going to learn the same way and have all the advantages of not having any monetary attachment. So when you're watching the live price action, you're trying to remove any desire for money. I promise you, there is a stage in this year where I'm going to tell you to go in with your demo account. I'm going to tell you, buy this price right here. I'm going to tell you, put your limit order right here and we'll watch and see it get filled. And put your stop loss right here. And we're going to do this run to this objective here. That is not an invitation for you to use the live account. I'm telling you, if you listen to me and do exactly what I tell you to do and avoid the things I'm telling you to avoid, you will get the best learning experience you would ever get, ever. But some of you just don't want to listen. And it frustrates me, which is why, again, I've been saying if you've made money taking trades on this shit, don't share it with me. I don't want to know because this makes me angry. It pisses me off, to be honest with you, because you're not listening and you have to listen. This is important. I'm only going to do it this year. So if you don't take advantage of it now and watch price and understand what it is it's supposed to do and not worry about how much money you're going to make and get funded or pass your funded challenges, that shit's easy. Look at what I just showed you this week. Every fucking day, every morning session, every afternoon session, I gave you 5 handles each time or more. It doesn't stop working just because you now start trading with a live account or a funded account, but you're thinking that. These candles are going to still do the same shit. They've been doing the same shit for 30 years while I've been looking at them, and they were doing it before I started trading and before I was even born. So the market's going to continuously do these things. So stop feeling rushed. Take advantage of just relaxing, unwind, and enjoy the process. Don't be feeling like you got to have it right now. You don't have to have shit right now, but patience. So when we look at how many opportunities per week, now this again in your notes, you're not inviting yourself to expect 5 handles every morning session and 5 handles in every afternoon session. That's too much. 50 handles a week that's a very busy week for someone that would be new, at least using the thresholds that I'm teaching you to work with. You've also learned, if you've been paying attention, that 5 handles is relatively easy to see when you know what you're looking for. But price runs can go more than that. And by doing what I'm teaching you to do, you will observe the times when it's going to be more than a 5 handle run. What does that mean? Well, how do you know that? Go to the visual aid I gave you. I'll give you a moment to get that loaded up on your device or computer. I can already hear people bitching now. You should just do this on a live stream. No, you should just listen and do what I'm telling you to do. All right, so I gave you a chart of Friday's trading, and you can find that on my Twitter. It was probably maybe 1 or 2, no, like 2 or 3 tweets back. It'll say visual aid. And it is the 1-minute chart of February 10th, 2023. And if you look at the far left, there's a dotted line vertical line says New York 9:30 opening. And on the far right-hand side, there's a vertical dotted line that says the 4 p.m. close for New York. In between those time intervals, you're looking for 5 handles as your initial baseline measurement for progress. You are not to be expecting, like I'm seeing some of you, you're not to expect to be able to pick out the 4069.75 low that I annotated early in the morning before the New York session. During the London session, I was talking to everybody on Twitter. You're not expected to know the 4104.25 high. The importance is to know how many times, by looking at through this entirety of price action from the low to high across the full spectrum of 9:30 opening to 4 p.m. close. This is the canvas that you're working with every single day. You, as the trader, need to look at this and say, what does this life that I'm living right now and leading, what does it allow me to trade? Does it allow me to trade the first half of this before 12 noon New York time? And that would be the morning session. Or is it more appropriate for you to be trading in the afternoon? Either one's fine. One doesn't have any better opportunities. They all have opportunities, but to help you frame your approach to trading and build a model that's unique and permissible for you, that your life and the requirements in your life will allow for you to engage. It may be that you can only do it 1 or 2 times a week. Okay, those 1 or 2 times a week is just fine. That's fine. Because once you start doing this, okay, because right now you're saying, my job, man, it just won't let me do it. I have school. My wife doesn't really support this idea yet. My husband, he thinks this is bullshit. I'm not going to try to convince him because I tried. He won't let me do it. And you don't have much time. Okay, that's fine. All that shit goes away when you start making money. Okay. Once you see that you can pull these setups and opportunities out of the marketplace consistently, your job that you think is the most important thing right now that controls every aspect of your time, that shit's going to fall secondary. You're thinking right now, I'd like to learn how to trade, but I got this job. I'm afraid to lose everything. I'm afraid to, take a risk. And okay, entrepreneurs. Here's the difference between an entrepreneur and someone that's going to be in the rat race forever. The entrepreneur tests to see if there's opportunity. Once the entrepreneur sees there's valid evidence to support that they can absolutely be profitable doing it, the job that they hold as their shield, their pillar of insurance, they hold on to that. That's their fortress and high tower they run into when things get rough. At least I have my job. Fuck that shit. That job is not guaranteed. Just like your next trade isn't a guarantee in winning. But see, you think that your job, that's a safe thing. That's a fortress of solitude. It is a bunch of shit. It's slavery. They have literally brainwashed you into thinking that that is what you should accept. And I'm telling you, that's not what you should be accepting. You're being limited. Your entire life is being held back because of that fucking job. You can only make what that person that employs you tells you you're going to make. You can't make any more than that unless they're nice to you. And this is what they've been teaching you. If they're nice to you and they let you get some fucking overtime so you can make the Christmas bills that you create for yourself. I know I used to do the same shit. Beg and plead, hey, can I have some extra hours? Can I please slave for less than I'm really, should be expecting as income? Let me prostitute my time some more and be away from my family some more for a little bit more money, for 1.5 times of the bullshit pennies that you give me. When you start seeing that you can do this, that fucking job is going to be secondary now. And that's exactly what you want. You want to do everything that beefs up and fortifies what you're doing as an investor. Because as an investor, there is no ceiling. There is no limit that you can say, okay, this is as much as I can earn. Who says that? Who says that you can't do that? Who says that you can't make $10,000 a month? Who says you can't make $10,000 a week? Who the fuck said you can't make $10,000 a trade? Who's saying you can't? The only person that can stop it is you. You, the same person that's saying, I don't like having to go to work, but man, I'm glad I got my job right now. What would I do if I didn't have my job? What the fuck would you do if you didn't have your job and you're earning money from your investments? That's the question you should be asking. Flip it instead of saying, what would I do if I lost my job? That's an abusive relationship and you're fucking holding on to it. You need to look at this chart right now. One of these two areas in the day, that's your home. That's where you're going to start. At your next home that you're going to move into. Mentally, psychologically, and you're going to live there. You're not going to give a fuck what the neighbors are doing in the morning session if you're trading in the afternoon. If you're trading in the morning session, you don't give a fuck what your neighbors are doing in the afternoon session. You're picking one. You're going to become a specialist in this, in that specific time of the day. And you're going to look for 5 handles. This is how you progress. This is how you go forward. Observing price action and keeping in mind what a 5 handle run looks like And you're not going to be limited to 5 handles. You will learn how to do 20 handle moves, 50 handle moves, and like you've seen me many, many times execute on over 100 handles. One trade. Full pull, no partials. Partials are for you. They're for you. They're like training wheels. I don't need to take partials. My trades are better selected when I can see partials there. That way, if something comes in where I can see maybe something's coming into the news wires, where some unannounced event. Oh, Biden's got he's getting ready to have a unannounced press conference. Oh shit, what's this fucker going to talk about? Then I can look to say, okay, let me scale some of this stuff out at logical places that would be profitable for me. But my trades I don't need to be taking off partials. I explain and show you that because you aren't me. You don't have 30 years experience. You don't know and how to trust and have the conviction to hold to your target. I do. I'm going to teach you how to do that.